Hey guys, welcome back to another free alpha video. Today we're going to go over GDP, what consensus is looking for, and how we think the markets will react from tomorrow's print. So let's start off with GDP. This is reported monthly for the prior quarter through these three readings: advanced estimate, second estimate, and final. Tomorrow's release is going to be an advanced reading for the fourth quarter of 2022. The Atlanta Fed has a pretty neat tool that we can use to estimate the inflation-adjusted GDP releases called the GDP Nowcast model. On the chart here you can see two lines, one orange and one yellow. The yellow is the prior reported GDP number and the orange is the Atlanta Fed forecasting model. As you can see, the Fed model is estimating an inflation-adjusted GDP increase of 3.5% quarter over quarter. Last quarter, we saw a print of 3.2%, as you can see by the yellow line here. So if this print were to come in at 3.5%, it would be both positive and higher than the prior print. This is generally something the markets really like to see, as it shows the economy is strong, growing, even with inflation being an issue. The biggest concern with the positive GDP print is going to be the Fed's reaction. Equity markets are off their 52-week lows as we head into the print, and they've been rallying all year, and they've been doing rather well. But the system has been building risk on under the surface going into this print, and the last time we saw this was around October of last year. We're going to be watching it closely though, because it's going to give us the signal if the risk on trade flips. At this point, the system is telling us that growth has a steadily rising probability of reversing to the upside, which would put us back into risk on. I think the market is going to take this and run, primarily due to the fact of a soft landing. We know that a soft landing is an impossibility, as the Fed will need a recession to ultimately cure inflation in a reasonable time frame. But that doesn't throw out the scenario where the market will screw consensus all the way to the target. Ultimately, if SPY can hold above Momo, the market should see some bullish action into the FOMC meeting next week.